It's 6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, ladies and gentlemen, depending on where you are in the world. My name is Patrick L. Young, the IPO-VID livestream, Series 12, Episode 5. That makes it Episode 71, starts here. Now, let me begin by apologizing. Episode 70 had a major league problem last week. As we went live, a massive power cut affected the entirety of downtown urban Valletta, the capital of Malta, and as befits, I suppose, the tale of the European Union in the 21st century, we had no electricity, leaving us in much the same situation as well. A lot of North Africa, a little bit to the south of here. We hugely apologize to all those of you who tuned in order to manage to see show number 70. The good news is we're going to be back with Mac Gill. Apologies to Mac of Torstone Technology that we couldn't run that show, but it's going to be coming soon. Watch this space, ladies and gentlemen. Mac Gill will be back on IPO-VID in the near future. Over in the Middle East, wow, Binance have moved to Dubai. And indeed, their CEO, Mr. CZ, the eponymous man behind the whole shebang, gave a very interesting interview last week to Bloomberg. It's the come to Jesus interview, replete with pouting post-portraiture in glamorous but moody environs of him and various members of his team. How very classic film noir, almost like Casablanca, in a manner of saying. The thing is, the message is CZ repents, or at least CZ realizes that his previous incarnation, the regulatory blob versus Binance, was in fact a variation of the old wonderful logician Raymond Smullyan's puzzle, what happens when an indestructible cannonball hits an immovable post. Thus, Binance is emerging with a volta face, a road to Damascus conversion, no less. It's a slightly bitter, the blob is so slow we had to change narrative, but it suggests a growing consciousness that avoiding the orange jumpsuit is vital to at least a series of crypto exchanges. Meanwhile, CZ himself appears to have added a further hedge to his location and relocated to Dubai from Singapore. Over in the conventional world of central counterparty clearing, of course, the conventional world of central counterparty clearing currently under threat from the proposals by FTX, which we've been discussing in previous episodes, and also indeed in previous issues of Exchange Invest, the Daily Bourse Business newsletter, which can be delivered live to your inbox every day if you care to subscribe. Congratulations to Minneapolis Grain Exchange, MGEX, now a subsidiary of Miami International Exchanges. They're going to be providing clearing as a service to the Intelligent Medicine Exchange. The Intelligent Medicine Exchange, we mentioned briefly a few weeks back. It's a whole new and exciting venture in a very new product area indeed. And I'm delighted to say that that marketplace looks all the more credible, thanks to having as one of their senior advisors none other than the illustrious former CEO of the CME Group, Bhupinder Gill. One deal this week, Citi, they had backed blockchain in the form of the company Settle many moons ago, as had various other banks and financial institutions. Well, Settle, who were trying to do CBDC and they were trying to do CSDs. In fact, they delivered a very interesting CSD into the French market a couple of years back. They've been acquired by Turkey's Colendi. Fascinating altogether. Colendi raised about 39 million just before Christmas last year. And it's interesting because, well, I don't know, maybe Settle had lost some degree of cohesion and traction when their co-founder Peter Randall left last year, just actually at the point when he appeared on IPO-VID livestream. Those two things, him appearing on IPO-VID livestream and his departing Settle, being entirely coincidental. But at the same time, it's fascinating to see Settle being absorbed by a banking as a service provider, Colendi, who have no fewer than apparently 10 million clients in their homeland of Turkey. 10 million clients, that's a wonderful thing to aspire to. Our guest today, ladies and gentlemen, is Mark Schaedel. Mark Schaedel is going to be discussing defending the data economy. Mark is the CEO of DataBP. It's a global provider of data commercialization technology and services to the world's largest financial institutions. Mark is also an advisor and a founding member of the CalcGuard consortium, which provides investment management participants with technologies to suit to support order, routing, transparency. Previously, Mark was Managing Director and Global Head of Index Services at IHS Markit and served as an Executive Board Member of IHS Markit Benchmark Administration Limited, which was an authorised benchmark administrator in the UK and the Netherlands before being taken over by S&P Global recently, of course. Mark spent 13 years with the New York Stock Exchange, where he was the Global Head of Information Services Division and an Executive Officer of NYSE Technologies. After relocating to Amsterdam in 2009, Mark became active in European capital market structure and chaired the FESE, Federation of European Securities Exchanges, MiFID Data Working Group, and was a member of CESR's MiFID Working Group. In 2012, Mark co-founded the COBA Project Limited, a consortium established to create a European consolidated tape. Enough of the illustrious CV. Let's talk to the man himself. Mark Schaedel, welcome to IPO-VID Livestream. Where in the world are you today?
Thank you, Patrick. Thanks so much for having me. I'm in Amsterdam, sunny Amsterdam, the financial services capital of Europe, of course.
Well,
there's
a lovely controversial opener. The financial services capital of Europe, continental Europe. I'm sure we can argue that without a problem. But whether it's the actual Europe, I mean, I don't think the UK government being so, I don't know, how can one say it, beneficently inept at the moment. I'm sure they haven't managed to tow the UK further closer across the Atlantic to the Caribbean quite yet, but who knows, anything could be on the cards. And certainly, who knows, the Scots might be trying that with part of their referendum initiative. Anyway, tell me, Mark, give us a little bit of an example. You started, I think, if I'm right in thinking, I mean, on Wall Street with Cowen, is that right? A long time ago?
That's right, longer than I can remember in some ways. Yeah, that was a long time ago, just out of college, worked on a desk fetching coffees and learning the insides of both, trading and post-trade back office type work. Started realizing that it really wasn't for me. I was someone that wanted a beginning, middle, and end of projects and life, and going home at the end of the day flat just wasn't so appealing. So I went to work for a vendor who at the time was putting in a trading system and needed help mapping that out. And we wound up going into a management consulting practice from there. And I guess the rest is history. Kind of stumbled into the data side of the business, and that's where I've been ever since, for better for worse.
We've seen more than a few petabytes of data have passed by in the course of your career so far. It's been an incredible change, the way that the data economy has fundamentally interacted with markets during the course of your and indeed my career.
That's right, and I have to thank you for being so brave to take on such an esoteric topic and equally provocative, I guess. Data commercialization. As you know, it's been kind of the source of a holy war for most of my career. And I find myself somewhat shy sometimes taking these positions out of fear of being drawn and quartered in the streets of London or New York for some of my views, which are often, I guess, even my friends might consider me to be a bit of a Don Quixote when it comes to data being a legitimate business, finding a place in market structure, the relationships to how the capital markets work, and really the necessity for data as a business and an important part of the ecosystem. So I'm glad we could talk here today. It's your show seems like a safe place for lateral thinking, which I think is a term coined in Malta. So all the more fitting. But really, I think this area has really lacked constructive dialogue.
Statement. What an absolutely marvelous statement altogether. Drawing in Malta, where, of course, you're absolutely right, the home of lateral thinking, the great Edward de Bono, who I had the joy of meeting several times before his demise late last year. It was a very, very sad moment indeed. Unfortunately, he managed to laterally think his way through a great deal of things, but certainly never managed to avoid death. Although Raymond Smullion, that I was talking about earlier on, I did like his comment, because as a logician, he was always keen to point out to his students that my death, it'll never happen in my lifetime. which I think is an absolutely apt remark altogether on the topic. Anyway, let me say hello to some people who've come in. First of all, let me say a big hello, because I do believe we're being watched this evening by Chuck Mackey of Maven Wave. Welcome, Chuck. I'm delighted to see that you're here. Certainly, I noticed you were signed up and raring to go to watch the show before this evening. It's good to see you all together. Hello, Peter Secon. It's absolutely delightful to see you on the show once again. We're delighted to have you. Hope Ari is well and everything's good. Hello, Simon Huckle as well. Everything is good at our end, thank you. And we even have electricity. Here we are 10 minutes into the show, which is an absolute joy. So let's hope that that hangs out for the course of the next 50 minutes and we can demonstrate that Malta can do not only lateral thinking, but, well, at least vaguely Dickensian concepts such as electricity power distribution. Now, Mark, you're talking about this whole thing. You mentioned yourself as a sort of a Don Quixote tilting at windmills. Why do you think that?
Well, I guess it comes down to the fact that, I marvel at this whole dichotomy of the industry always agreeing that data has such critical value and importance to the capital market system, and yet it still feels as though the capital markets regards data costs as a tax on their business. So in many ways, it feels like there is a certain inertia in our industry, and I think it's preventing or precluding, constraining evolution. Right. I think the markets are naturally gravitating and becoming very much a data-driven ecosystem, but there is still this kind of undertone of threat and almost offensiveness when it comes to data commercialization. And I think that's something we need to get past and beyond and try to rationalize and realize that we're in a transition, right? This transition is somewhat painful. The costs that have been triggered by the changes in technology, both from a demand perspective and also an enabling perspective, came very quickly and kind of overcame the transaction business in some ways, and needs to kind of settle in and find an equilibrium. And I think we're still in that transition. And so I think competition will prevail. I think the system needs to support competition properly. And so I think some of the regulatory threats, some of the policy making threats are very concerning. And I think they're driven really by the lack of acceptance for what data means to the ecosystem.
That's
You're on
quite a
mute.
lot just for an opening statement. Lots happening there. What have we got here in terms of the regulatory threats at the moment? Perhaps you can just run through those for us.
Sure. I mean, there's everything from, I'd say I'd focus on price controls first, right? And focus on data costs being something that regulators feel that they should intervene on, and even get specifically focused on how costs are bundled, how they're structured. So in the case of ESMA here in Europe, I feel, rather exposed, to a lot of the discussions there, the regulatory discussions on RTS and things that are coming down the pipe. But equally in the US, as you've seen and heard from some of the roundtables earlier last year, leading into the Gensler administration, the Brett Redfern handover, there's been a lot of discussion around data, a lot of misperceptions around what data means. And I think a lot of misperceptions around who the actors are, where the faults lie, where the problems lie. And it's just an area that needs more focus. It's esoteric, like I mentioned. It really lacks a lot of innovation and a lot of focus. And I think as a result, it is painful, and difficult for the industry to manage, both from a cost perspective. But what I'd like to talk today about is our customers and the data BP business, which is focused on making this data ecosystem easier for those who provide data into it as well.
So, so that's obviously a very interesting issue, because you talk about the data ecosystem. There's this perennial battle where people believe that their data is worth an enormous amount because they create it, because they're creating the orders and so on. And then that's the first kind of area of competition, the first fractious point of ignition. But it always strikes me that that seems a little bit like being the man who provides the raw chickens to KFC and then claiming that he ought to have 10% of Colonel Sanders' fortune. Is that a reasonable assertion?
It is. I think there is a certain, there's certain concern to how the market structure works today. I don't disagree that costs are challenging, and we are going through a transition where I think there's a certain concern around the lack of competition, the lack of price elasticity, and the ability to have discretion over what data is purchased or licensed. And I think all of those are issues, right? But we shouldn't throw the baby out with the bathwater. This industry has successfully embraced technology. It has commoditized the transaction. Data has remained a stubborn source of cost, and retreating back away from competition to price controls and monopolies and systems that are going to hopefully overcome and make data free, I think is the wrong direction. I think we need to embrace competition, look at opportunities to break down the barriers, make discretionary spending possible, and evolve to a system that data is equally as important as the transaction, perhaps even more so.
Yeah, it's a very interesting piece unpacking the whole amount of cost that goes into the data, because certainly the one thing that intrigues me is that the data that we paid, as far as I can see, essentially the same price for 20 years ago as traders, and the data we get today, well, we're getting about 25 times as much data, and we also get a huge amount more subsets
That's
of
right.
data, and we get an incredible amount more accuracy of data, because I mean, it was just a human inclination, what you could actually type up when you were in a gallery on a floor compared to what somebody was shouting in your ear, compared to what can be done nowadays in a low latency market, makes a big difference. I don't understand. I mean, I'm with you here because I genuinely am mystified at this whole idea of the fact that all data is a total utility and therefore must be treated like 1960s British electricity, or indeed possibly 2020s Maltese electricity, because we see where that gets us.
That's right. And we've celebrated fintech as kind of an investment in the industry, investment in efficiency. But fintech kind of boils down to your ability to consume, process, and action data, liquidity insights. And so it kind of boils down to data itself. And there's certainly an unwelcome source of cost, and it's not fintech, it's the data sources, and those being structured well and granular and broad and all the things that we want in data sources, doesn't seem to be as appreciated as the sources of tools that allow you to consume and use and form unique insights. And maybe that's by design, because if it were easier for a broader constituent, then you wouldn't have those unique insights, that competitive advantage. So maybe that's part of it. But I think there's just a lack of, I think, appreciation for, I think, what data means to our ecosystem, what it means in terms of efficiency, managing liquidity risk, creating safe grounds for investors, accountability for investors, which translates into confidence, um, transparency, issuer visibility, and that's just in the equity space, right? We're not talking about the evolution still in the FIC markets, which I think are still in their infancy in terms of data commercialization, data being part of the fabric of the way the capital markets work.
I love that. The FIC markets are in their infancy in relation to data commercialization. There was me. I would have said they were in their dark ages. You're a much more diplomatic individual than I am, Mark. Obviously, it comes from the way that you can manage to work your way through with DataBP, as you're effectively, as you are doing very eloquently today, defending the data economy. Let me just say hello to Ian Bonsor. Great to see you this evening, Ian. Thank you for joining the show. Good to have you online once again. So if we look at what's been going on in relation to all of these data points, I mean, you mentioned FIC data compared to equity data. Now, there's one area that very rapidly gets us into a whole new subset of controversy. And certainly that's something that American regulators are talking about all the time. And European regulators start to talk about, and they don't even have one yet after 10 or 12 years of talking. I mean, 10 years ago, you were trying to look at building a European consolidated tape. Here we are 10 years later, absolutely no fault of yours. Many people have been trying. It seems to be the Sisyphean data task of the moment. But how do you feel about the overall concept, both of the American consolidated tape for equities and how that works, and the possibilities ultimately in Europe?
I'm encouraged by both initiatives. I'm discouraged by the lack of policy-making capability to support these transitions and to support the evolution. I don't think that policy-making in either European jurisdictions or the US jurisdictions is capable of supporting the the needs of our market structure today. They've just become too complex, and so everything is soundbite driven. And I think that's been part of the reason why we haven't seen much in the way of progress. We're still waiting to see what happens with the U.S. proposals in terms of their reforms and evolution. I think some of those hold promise. Some of those I'm still slightly less optimistic about. And here in Europe, it's just been a long journey, road to nowhere, and largely due to the fact that the data cost holy war is boiling in the background and has really been taking a lot of the oxygen out of the room and precluded us from making real strides into enabling transparency in a fragmented market, enabling all those things I mentioned earlier: investor accountability, liquidity risk management. And I think what both systems become is the basis for a more sustainable market structure, one that recognizes the participation in lit market trading and contributions to price discovery in a way that could even provide commercial incentives for that participation. And without those incentives, I don't understand how sustainable participation in the lit market is. With the risks involved, with the costs involved, it's cheaper, easier, less risky to not trade lit. And I think that's a problem for the quality of the prices formed on these markets. So sustainability, I think, requires some degree of data being part of this ecosystem and supporting the market structure properly.
Certainly, it's a huge task, particularly in the European market structure, because you've got massive exchanges such as LSEs, such as Euronext, and in certainly its larger components such as Paris, Brussels, and Amsterdam, and also the Deutsche Börse and Börse Milan, and Spaniards as well, and presuming you get the Swiss in there. But then you've got this very long tail all the way down to places such as Zagreb and so on, who are in a very, very different dynamic of business.
Well, that's right. And I think, they've been actually allowed voice recently in the debate here in Europe, and largely concerned with the unknown. What happens through this transition? What does it mean to their business model? I think it's probably the thing that saves exchanges more than harms them, and creates the visibility for their issuers, creates visibility for their own prices, and creates a potential revenue source that they don't have today, and a much broader source of distribution. So I've been encouraging exchanges to adopt a tape position, and in favor at this point of a mandate. But I think it should come with fair compensation for what they contribute to the tape in terms of information value. And I think that could be opened up to any platform. It's not just exchanges. Anyone who contributes value should be able to participate in this ecosystem, and the ecosystem supported by a tape that could enable that type of a collaborative and open commercialization framework that incentivizes participation in the lit market and ties together the value proposition what an investor uses a tape for, which is to understand where liquidity lies in the market. If you ask any investor how much L'Oreal traded today, you ask 5 different investors, you get 5 different answers. That's just dysfunctional and needs to be solved. And I think policymakers need to recognize this is not unlike any disclosure regime they've come across before. But we've been asking them to build some big black box in Brussels, which is not it's not a typical thing for them to take on. I think it's very unnatural. And so it's become a very awkward political football. And I hope what we find is this settles down into a negotiation of sorts and gets rationalized into something that's a lot more basic, which is, let's make sure we can get all of the data across the European Union together in one place, and even beyond into the UK, and available to the broadest set of users and investors as possible. And doing so should not hurt anyone or necessarily give anyone a free pass. I think that's the outcome that can happen and should happen.
Very interesting view altogether. So therefore, I mean, how does that contrast with what has been the, ongoing soap opera in the United States of America of the SIP?
SIP, yeah, it's a misperceived source, I think, of it's a misperceived part of the market structure there, and the national market system. SIPs are cost driven, are cost based, right? They provide a service to the plans. There's two SIPs today. They provide service across three tapes. They're paid for by the plans, so it's a cost function. Competing SIPs, I think the idea Brett Redford had in mind was that would drive competition into some of the proprietary businesses exchanges hold. I really think that the SIPs have been very successful. The tapes have been very successful in the U.S. I think it could evolve further into something that does recognize lit market trading, price formation activities in a more clear way. And actually, it plays a role today in payment for order flow, which is also equally provocative topic, in that the tape powers exchange rebates today, right? That's the source and currency for paying for orders because it's fungible. A trade credit is fungible with an order. Those orders can be paid for with that tape revenue. If you break that link, it'll be interesting to see what could happen if we could pay for only those trades that contributed to lit market and therefore informed investors or were part of price formation. Would that change the dynamics of the industry? Would that bring more lit market trading? I'd like to see how some of these commercial incentives could play a role as opposed to just conduct rules, which I think are ineffective by themselves. The US still has an opportunity to do that.
Yeah, it's a very interesting opportunity in terms of the conduct rules that could be quite constructive to driving change. I agree. Thank you very much. We are defending the data economy this evening with Mark Schaedel on IPO-VID number 71. Good evening, Ian Miller. Interesting indeed, IPO-VID. Thanks, gents. And let me wish you a very happy birthday for the weekend, Ian. And I do believe it is Mrs. Miller's birthday. Is that tomorrow or the next day? Something like that. There you go. Cornucopia of big data experience around here. We can even remember people's birthdays. Now, Peter Secon's been asking a couple of questions recently. Peter, I'm not quite sure about your first question that you asked here a moment ago, because you asked a question to the effect of, should data drive private law? Maybe you could flesh that out for us a little bit, and we'll try to answer that because I'm not quite sure I follow it. But I'm interested in this one. What's the biggest, most recent regulatory challenge you've had to adopt to from a data perspective, Mark?
Well, I think our clients have had to, particularly in Europe, have had to adapt to the reasonable cost measures, the RCB measures that ESMA have refined recently and put out there, and in some ways I think have been largely ineffective. Again, it's an attempt at conduct rules to do the job of what competition should do if it were enabled properly, in my opinion, and I think have largely been ineffective in terms of what they were meant to do, and just added complexity to a market that's already overly complex. And I think that complexity shows itself every day, and that's what our clients are faced with. They're challenged with, and that's what DataBP was created for, right? Is to help them and provide a source of support to meet the challenges and the diverse needs of the market today. Technology has driven change. Everyone's a data consumer, can consume greater amounts of data, more granular sets of data. That diversity, not just in consumers, but also in fintechs and redistributors, means greater demands on wholesalers of information that is really tricky to manage at scale. And that's where our tools come in. That's where our platform comes in. And I think if we're able to help them, both index providers, market data providers, all the wholesalers, manage this process more efficiently, make the business more efficient, we can really start to evolve in terms of adopting, things that are going to enable competition and really start to be more aligned with how capital markets are evolving. It's the area that was forgotten about. We've really innovated around technology use on the front office side, and order routing, and all of the different types of tools for accessing liquidity, for processing information, but not the administration of it. So the commercial framework, the commercial market, which is inherently non-standard, is a minefield. And everyone complains about that as much as they complain about the cost. And so I think that's what we can solve for and make better for both sides of the equation, both the providers and the consumers. And everyone involved in the ecosystem by adopting simple things that we all face in our daily life. Use of APIs and workflows that are automated, pleasant experiences that we all have in consuming products and getting licensed for media, digital rights management tools. Those things are available now, but have really been left to the side, and we're still running some of these large $100+ million businesses on spreadsheets and paper.
Which brings us very elegantly to the opportunity to ask you about DataBP. So explain to us exactly the thinking behind DataBP and what led you to launch it.
Sure. Well, like I said, I'm a big believer that data will play and continue to play an increasingly valuable part of the capital markets ecosystem. And so everyone will be a data provider at some stage. And we're focused right now on the space that we know. We all came from an exchange group, worked together at NYSE, and built a platform there, and subsequently went off and built a platform for other exchanges, which has now evolved into something quite sophisticated and being used not just by exchanges, but IDBs and trading platforms, vendors, and increasingly we're talking to crypto providers and everyone out there in the capital markets and crypto market spaces, any data provider or wholesaler who's faced with the same challenge, meeting that diversity of needs, diverse set of customer relationships for licensing and subscription management, and automating those workflows, making them fit for purpose. A document gets signed and passed along through a poor procurement person onto a lawyer, onto a technologist who has to interpret that document, what they can do with that information, how they can put it to use. We want to take the ambiguity out of that to make the market and make the business more efficient. Studies have shown that only half of the revenue that should be realized through data licensing is actually being recognized today or realized. And that's a problem for everyone because we all complain about cost. Those costs are being concentrated and should be spread over a broader base of customers. So the business itself can be made more efficient, more attractive for new entrants, and made just less painful for everyone. And that's what DataBP is focused on, and that's what we're doing.
So is part of that approach to try and get towards a kind of master agreement for data? Is that one of the things you're trying to automate?
Well, the one thing we are trying to do right now is adopt convention and best practice. There's no reason why anyone goes their own way and builds it their own way and has their own sorts of policies. They do because there is no standard for doing so. We're at least standardizing the workflows. We have a critical mass of exchanges and data providers today. They're all looking at transitioning into a world of accounting for data use beyond users and beyond terminals and into the world of what they'll call non-display, which tells you how much trouble they're having with this transition. It's a bit like non-equity. What does that mean? It's not a display. Okay, so it means that we have to track data usage in a different way. We're wholesalers with retail pricing models. How on earth do we administer this? And over the years, we've become so dependent on a few key vendors and redistributors that we don't know how to respond and support this new ecosystem of fintechs, of cloud app providers, and everyone else that wants access to our data. How do we possibly support them? That's where our tools come in. That's where our platforms come in.
I must admit, you get me there because I've heard this phrase many times, but the whole concept of non-display strikes me as slightly oxymoronic, and I'm really not understanding it. I mean, the only thing I can think of is non-display data. Is it sort of reminiscent of one of those old floor locals who was having a really bad day and he had his eyes in front of him and he was essentially trying not to look at the screen. So what exactly does non-display mean? Do you think perhaps it's open to interpretation?
Yeah, I mean, look, we've lost the ability to account for retail use, to not just retail use, it's any usage, end user consumption on the basis of who those end users are or what devices they use. So we have to turn to these things called non-display policies, which account for how much data is being used across an enterprise system, whether that be for trading purposes, for risk purposes, for anything front to back office. And that's the new scale at which pricing would operate. People probably are bristling in their seats when they hear this because they feel like it's a way to exact more tax on the industry. But most wholesalers are actually losing money through this transition year over year. So as we automate and we save costs in terms of operating our own businesses, of using data, Although the data costs are greater because our demands are greater, we want more data sets to feed our automation. We need more granularity, more breadth. We need a global data set. We need more asset class coverage and multi-asset strategies. Our passive strategies, quantitative strategies, all are very data thirsty. So it's no doubt that data costs will increase. So that's a frustration the world shares. But I think there's also the other side of the coin to look at and consider, and that is, how will data work in the new world? In the new world of, it's not about charging Patrick or Mark for data, it's about charging a fee that's appropriate for the level of use. And that scalability is important because it right sizes the cost for each type of organization. And I'd say we got that right sizing wrong today because of where we are in this transition. And that's the pain we're all feeling. We need to get through this transition, but not abandon competition. I think we need to embrace it and move on and let it evolve, let it happen in a way that is inevitable and really a natural evolution for the markets.
It's very interesting. I mean, therefore, I do understand what you're talking about with the whole non-display piece. And actually, it reminds me of a fabulous early example of this sort of confusion in the field, which was in the early 1990s when the World Wide Web first became a thing, and the Oz Email organization was desperate to try and get traffic onto its homepage, which ultimately was hugely successful. It sold out for a small fortune. And what they did was they walked up to the Australian Stock Exchange and said, how much is it for an all singing, all dancing, everything license for all of your data? And the Australian Stock Exchange looked at these ruffians who weren't dressed in suits and said, well, for you chaps in .com casuals, it's $1 million a year. And they said, okay, shall we send you a check or shall we send you a transfer? And promptly they put the data on their homepage, which nobody at the Australian Stock Exchange had actually ever thought anybody would be stupid enough to do, because they presumed when you paid $1 million, you were going to sell it to people for something else and therefore not just give it away, which is a fascinating first episode in this. The other one that I love is you were talking about all this documentation, and certainly having bought a few indexes in my time and licensed them, it's quite incredible the amount of paperwork that those things manage to generate, when actually a huge amount of it could be entirely automated and it could be the same agreement for all parties concerned. Although I do still love one of my friends, now retired, who fabulously as an index provider, I think slipped in Ruthenia into the list of countries for a particular index deal where he was selling to a major bank, and they promised to deliver it in all of the countries that were within the agreement at the press conference. But those are the sorts of things that, just are totally confusing about the use of the data market per se. We are defending the data economy this evening with Mark Schaedel of the DataBP, a very, very interesting organization indeed, which he's been outlining. So, it's interesting when you step back. I mean, you mentioned this, but exchanges, I mean, banks have this sort of position that they seem to sort of naturally think they own the data because they put in lots of orders and therefore they create it in the first place, which is a bit like the KFC chicken analogy that I said before. I mean, they're certainly the farmers of the actual natural product that goes through processing. But exchanges as well, I mean, they tend to find they really do struggle a lot of the time with dealing with the data picture these days. I mean, once it comes to dealing with it out of the box thinking wise.
I think they're coming around. I think data is becoming now strategically important. I see the businesses evolving towards data becoming part of the value proposition, the core value proposition. I think ultimately it becomes part of, seen as the all-in costs of interacting with that platform. And hopefully fees can be structured in a way so that it reflects the true sense of value, and whether you're contributing to that or not should be reflected in what you pay for data probably at some point, right? But the argument that it's my data, even when I stick my order into a black box and what comes back to me is now a reflection of how that order is interacted with other orders, is not the same thing. And it's a road to nowhere, that discussion. It's been going on for a couple of decades now. I think the idea of licensing prices, licensing broader sets of content, intelligence about how orders interact, and all of the sense of unique insights that can be provided from trading platforms, valuations, and all different types of information around the trades and around the interactions are all really interesting. And those are only now being are able to be consumed by this world that we live in today. So it's a really interesting evolution. The problem is still, the Achilles heel is still the lack of innovation in terms of how this market works today commercially. how the framework works. And I don't think we'll get to one contract, although consolidated tapes provide that, at least for the coverage tapes provide. But at least what we're looking at is use of digital rights. Today, we already can and do dissections of these contracts into the data that the contract represents. So, what are the rules that are part of the contract without you or I having to go to law school and interpret that, but actually can break them down into business rules that can drive processes and automation? That's what we're investing in. That's what we're looking at now, and that holds real promise in the near term to make a real difference in terms of how the markets work.
I think that's a brilliant point when you're defending the data economy as you're doing this evening, Mark, because certainly having run an exchange, having run various desks at different times, it's just an absolute pain in the backside when you get data agreements through, because you end up with these doorstops full of agreement. And apart from the fact that I think in this day and age we shouldn't be printing anything, and therefore that's another couple of small bits of rainforest down before you've managed to get any further before it goes through the GC's office. You are engaging multiple different functions in the business, which are very expensive, such as your legal team, your general counsel, etc. And it slows down the ability to decide and understand what you can really do with things. However, isn't there also a sort of a problem, or perhaps this is dying out now, that I've seen certain exchanges seem to be arming preppy young people? Often they've had a consulting background with a sort of a virtual clipboard, and they've been dashing around the offices of their clients and tallying up in an effort to try and make sure that these people pay more for their data. I mean, isn't there a more elegant way to manage to be assessing that?
Perhaps, and maybe there are some practices like they're out there where I think maybe exchanges in particular and index providers and other wholesalers of data feel as though the way the world has been extracting value from their data no longer reflects what they should be paying for, and that's their decision to make. But I think this is where policymakers have a legitimate source of concern and can really help solve things by a contribution mandate to a tape, which makes sure that everyone has the basic information they need to interact with the markets and have the confidence to be able to hold someone accountable to a benchmark. If you are, one of the high frequency traders and have these weapons of mass destruction at your disposal, you should be at least able to achieve what we see on the tape in terms of performance of price. So, in terms of some idea of where I should be, I'm not talking about best execution down to, a science, but having some idea of where I should be, where I should trade, I think is the basic function of the markets that I would expect as an investor. It's the basic function of markets that as a professional investor needs just to manage liquidity risk. And even the most sophisticated investors that I'm aware of in the market today have to scale back their participation in the market as a result of exposure to that liquidity risk. Not knowing what actually traded where or what can trade means they have positions they have to manage and unwind and are flying blind. And they have conflicting sources of information about what's actually available. This is a problem for the scale of the markets, the health of the markets, and we have to get over it. This is costing much more than the explicit costs I think that we're all concerned with of paying at the till for our data bill.
Well, of course, one of the issues, I think, isn't it? I mean, the random top level accounting phobia of doing numbers, which was actually one of the things that killed off floor trading as much as the efficiency of electronic markets, simply because the cost of dealing on a floor was more expensive than dealing through an electronic system. And the accountants didn't allow for the fact that one, parrots could manage to try and fight you when you're talking, as indeed our neighborhood parrot seems to be doing at the moment. But more importantly, when you're on the floor, you could get a price improvement, but that never got factored into the amount of brokerage you got paid. And I remember having this argument when I was evangelizing electronic markets around the world. It's fascinating to look at the overall package of data, because it seems to me a lot of things are still moribund with just Dickensian practices, or certainly practices from a bygone analog age that, to my mind, just don't make sense. Now, I mean, maybe I'm wrong. I mean, you're defending the data economy, but explain to me, and actually explain to several of our viewers tonight who are shareholders in Valerian PLC, why do they have to wait 15 minutes to get any information about the price trading in their share? Isn't there a more elegant way to get around that?
I agree. I mean, that vestige was created at a time when we still had physical ticker tapes printing, so they needed time to catch up. And it was kept around because it was a convenient way of creating a lower priced entry point for retail investors to use. It's now evolved into something that we all see and hear about it every day, and I really question if it's outlived its usefulness. I think we all know it has, right? And that's the way these markets have evolved, right? The commercial market for data has really not evolved. We've relied on vestiges like 15-minute delay that was created for a ticker to create a classification for a use type, all because we can't figure out a way to change and modernize for the current use cases. That can all change now. We have that capability. We have the ability to move forward and move on. It requires obviously everyone to want and not resist that change. But I think there's a great deal of opportunity when we do. And so that broader market, that diversity that we talked about earlier, is the growth opportunity, right? If you can meet those demands and offer products, more products for more clients, that's a better way, a more democratic source of funding for your organization. If you're in the price discovery business and your price is actually your core product that you're now being enjoyed by a much broader set of constituents, and that can be spread to a broader base of consumers, and fees can be spread across that broader base. That's a good thing for any business model. It's the natural evolution, but there's so much inertia, both from the way the markets think culturally about data and the way regulators think as a result of being lobbied, I'm afraid, into thinking that this is not a natural occurrence and it's not part of an evolution. And embracing competition isn't the way forward. In fact, we should retreat from it. I think that's the threat. And so what we'd like to see at least is a commercial framework that is much more streamlined, much more user-friendly, makes much more sense, and creates fertile ground for these problems to be solved, not with 15-minute delay data, but with the different types of policy fit for a use case. And if we can have policies fit for each type of use case out there, meeting those diverse needs, that would be fantastic. The challenge is managing those relationships at scale. That's what we're setting out to do.
Ladies and gentlemen, well, first of all, let me say good evening to Optimistic Prime. Hello, good to see you this evening. It's lovely to see you alongside all of our other viewers this evening. Thanks for checking in. And do send us a little bit of love, because in the big data world that we're in, the more love, the more likes that we get on this stream, the more likely it is that the AI data bots are going to process us to go further up the stream. And if we therefore go further up the rankings, hey presto, we can take these important messages that are unpicking these complex problems and issues in financial markets to the wider world and hopefully help the regulators, the participants, and indeed the general public understand better. Mark Schaedel's doing a great job this evening of defending the data economy. Ladies and gentlemen, we've got 10 minutes left if you want to ask a question. There's often a slight delay on the ticker for everything coming into us. So if you've got a question, ask now or forever hold your pixels, please. But Mark, it's very interesting what you're talking about in this whole data thing. One of the things I see, which, 15-minute data, that seems to be completely and utterly a ridiculous concept. Second of all, although it came from an obviously good historical reason, the other one that drives me insane is the way that futures and options exchanges still sell you packages of data, which I just find completely and utterly nuts. I mean, you talk about today the digital rights management age. Why on earth do I have to go in and spend, whatever that is, even as an individual investor, as a small family office, we end up spending hundreds per month on data that we don't actually need, because we only look at 1 or 2 or 3 contracts on a particular exchange, but they say, well, you can have all 20 of them. And surely there's got to be a way to manage to unpack that in a digital economy and sell us the packages that we want, probably at a slightly higher than pro rata price, and at the same time get that data to more people and therefore get more people trading.
That's right. I guess it's not unlike many of the subscriptions that I have and you have, and my cable TV package that, has channels I haven't watched in years. Does it mean that I'm more attracted and more able to attend that event online and watch that game that I wouldn't have watched otherwise because I have the channel? It's a bit like the point you just made about having the availability to trade those products and contribute to that ecosystem. I guess there's a cost balance of everything, right? And we have to strike that balance and maintain it. That equilibrium is hard to maintain. It's even harder in an increasingly diverse market with increasingly diverse use cases, what's the right price point for Patrick Young? It's definitely different for Mark Schaedel. And
Of
I
course.
don't know how you can possibly appeal to everyone's cost needs or desires other than injecting competition into the mix. We talked about the tapes and the potential for what that means, but the idea of having a pool of revenue that participants in the tape have to compete for is a form of competition. Otherwise, lacking competition just naturally in a space where if I want to trade on a market or have the option to trade on the market, I need to have access to that data, just like I need to have the ability to route trades to that market and be connected to them. That may be my executing broker that takes that position. So they're going to have all of those weapons of mass destruction and be able to access every quote, every tick across the global space. And that's what I rely on them for. But as an investor, I'd rely on a much broader base of information to get a general sense of where liquidity lies, what I'm looking at, what my portfolio looks like on any given day. I don't need to be nanosecond, but there are a certain crowd that do need that. That classification and different type of use case, I think, is important. Is incredibly important to get right. And right now, we're not striking that balance. And I think that's the pain everyone feels and moans about every day. And there's some viable ways to go about attacking some of those problems, and that's what we're focused on.
Yeah, I think that's a great point. I mean, essentially, what we have at the moment is an endless stream of two or three or a limited number of providers who are offering us huge buffets of all you can eat, but within certain constraints. And at the same point in time, a lot of us would actually be quite happy to eat a la carte. And we may well want some specific rinky dinks. And I agree, it's going to be difficult to unpack, but there's got to be a better way to do it than the current. Now, that brings us very interestingly to a question, another question from Peter Secom. Thank you very much, Peter. Exchanges and regulated trading platforms provide the highest quality data for capital markets participants. What's the strangest data request you've ever received?
That's a tough one because we don't field those requests ourselves. So our platform powers up our customers. They field those requests. They use our platform to respond to them. I'm sure there's all types of strange requests out there today, right? Increasingly strange, probably with the diversity of the customer base, who all have varying degrees of sophistication in terms of what they can be licensed for, how they can interact with the markets, and probably would like to see the other customers order if they could. I mean, I'm sure those requests have come in. I don't have direct exposure to that, so we're very much powering up. We call ourselves the operating system of market data. That's aspirational, obviously, but that's exactly what we want to be: is the operating system that underpins all this and brings more convention and more streamlining to the industry and makes it much easier just to move around and access data.
So just fill us in a little bit about that very interesting point that you've just made. So essentially, DataBP, you're a B2B provider, and what you link into the people with the data, and you help them in order
That's right.
to manage to distribute it and
That's right.
organize it in ways that it can be sold, and therefore you presumably are able to give them a lot of other data, or at least input on the increasingly interesting ways in which you can price it or slice it, etc.
That's right. In a nutshell, it's a SaaS platform that plugs into their upstream sales and CRM systems to take orders from clients. It has a customer-facing portal where their clients can self-service themselves for licensing, for access to subscriptions. They build an inventory about the clients, what they have access to, which products they use, what policies apply to those things. They get reporting in from vendors about what was consumed through those packages we talked about earlier by their end users, reported back in, so that Patrick gets his Bloomberg service and also gets the appropriate fees from each of those providers into Bloomberg. And it provides all the basis for doing that. It connects down to the downstream billing systems within the organizations. We also operate our own billing system. We have a team of operational specialists who will actually run the entire data business for you so that you could just focus on building content and then putting it into the cloud, letting us manage the entitlements to the cloud, letting us manage entitlements to the streams, and helping you license that content. And all you have to do is look after your customers in terms of the relationship and let us do the rest. We think that that's a way not just to help our customers, but to help their customers with more convention familiarity and a better customer experience. And I think that's the basic footing for how we'll make the industry reflect the modern use cases and be much more easy and accessible to manage. We don't solve the cost problem overnight, but by doing so, we create that convention, expose opportunities for adopting competition between providers, adopting things like pay for what you eat, and other things like we've talked about, supporting more types of use cases, and just making this this problem a little less challenging for everyone.
Thank you, Peter Secon. That was absolutely fascinating altogether. And indeed, Peter Secon adds, as a postscript, he says, I just wanted to say I enjoyed your article last autumn in The Trader on reinventing market data share.
Thank you. Thank you, Peter.
There you go. Excellent. Thank you very much, Peter, for all of that input. Thoroughly appreciate that. Let me also just say good evening to Nicholas Caffeine. It's lovely to see you this evening, Nicholas. Thank you for joining the show. And you know what? We have reached 55 minutes of discussion. We have seen you, Mark, do a great job of defending the data economy. And I think this is very interesting. Nobody has yet mentioned the T word for terminal. We've had all of this conversation about innovation, the future, what's going on, and so on. Nobody's talked about using their data terminal, which, of course, I think is endemic to some of the things that are happening in the big world of big data that's going on at the moment. To which end, let me ask you the final question that we always ask of our guests. Mark Schaedel, where do you think the capital market revolution goes next?
Well, from a data perspective, I think the business that I just talked about will look more like a media business. I think the way we interact with, I mentioned this earlier in the discussion, the way we interact with media and consume media will look a lot like how we interact with data. It will become part of the fabric of how we inform ourselves, right? That media provides us information about the markets over broadcast networks. It will be powering up our daily interactions with those markets, provide us insights and ways to form our competitive advantage, which is the way markets have always worked and will continue to work. It will be based upon our ability to consume and action unique insights from information, and extracting those either faster, more insightfully than the next person will always be that source of competitive advantage. I think the broader markets will finally learn to embrace data into its fabric and accept data and data costs and transaction costs as being kind of the equal all-in costs of interacting and finding and sourcing liquidity. And I think when that happens, there can be more competition unleashed, and that it will be part of the value proposition for interacting with that liquidity. It means I have to make a choice. How much is it going to cost me? Is it worth it? Will my order be broken up? Will I have a better experience accessing liquidity through those channels? And if so, if the answer is yes, then I've justified that cost. If that includes the cost of consuming that information, that would be fantastic. I think that's where everyone wants to get to. We're all used to on-demand sources of media that we have in our lives today, on-demand source of information. I think that's exactly where we're going as an industry, and the way that data will evolve along with it.
So there you have it, ladies and gentlemen. Mark Schaedel has been defending the data economy. And ultimately, what did he say? Well, I could distill it into 3 words, actually, which was the original rallying cry of the capital market revolution itself in 1999. Liquidity, accessibility, and transparency. How you're going to look at your data as it goes towards more of a media style environment, I think, is a fascinating opportunity altogether, and one which exchanges and all aspects of the ecosystem of financial markets should be embracing readily, whether it's through DataBP or some other form of new data competition. Mark Schaedel, thank you very, very much for being with us this evening.
Thank you.
Thank you to all those of you who've made comments this evening. It was a joy to see Peter Secon and your various excellent questions and comments. Thank you so much, Peter. Simon Huckle, Ian Bonsor, Ian Miller, Marcus Ward, Les Calvert, Optimistic Prime, Nicholas Caffeine, you all engaged with the show this evening. And it only remains for me to say a huge word of thank you to our production team this evening, Herminia, Marianne, and Jake. You did an excellent job all round. Nothing next week, ladies and gentlemen. July the 4th, holidays. July the 12th, we are going to have John Kim. He's going to be discussing CBDCs and the future of money. Thank you very much once again, Mark Schaedel. We have been defending the data economy. This has been Patrick L. Young for IPO-VID. Exchange Invest will be in your inbox as usual tomorrow. Thank you very much, ladies and gentlemen. We'll catch up in 2 weeks' time.